Well, Aly-Khan, we had the Kenyan markets ending slightly higher last Thursday, but really no great shakes for the year as a whole on the Kenyan market, was it?
No, I think, the story of Kenya was very much the story of the frontier markets, which significantly underperformed emerging markets and the developed markets. We bottomed out at about 2381 at the end of March, and we're about 900 points higher. We have been grinding higher in the last 6 to 8 weeks, but as you said, it was a poor year for Kenyan stocks in 2009.
Aly-Khan, what do you think some of the factors were that were holding the Kenyan market back? And of course, we did have those disputed elections earlier, and that was obviously a factor for foreign investors looking at the Kenyan market. What other factors do you think held them back?
Well, I think, the political issue was one that overhung the market all year. And I think the market will see a very positive response once we get some kind of closure on that issue. And I think especially if the ICC takes some kind of positive action, that will be a catalyst and a trigger for a sharp upwards re-rating. But I think we also saw a lot of domestic investors invest in Safaricom, about 800,000 out of 2 million investors. And, the IPO price, we never saw the IPO price again. We're coming back now. I see that price going above there. But it took a whole bunch of people out of the game. And then we had this outsized issuance of government bonds at extremely handsome rates. We continued to sell government of Kenya bonds at more than 700 basis points above the inflation rate. And that's very much skewed everybody's interest towards the bond market and away from the bourse. And I think also, finally, a low GDP trajectory. We're still struggling to get off this very low GDP level. And I think that's also sort of kept things under wraps.
Well, just looking forward to 2010, do you think we might see some rebalancing between the fixed interest markets and the stock markets? And what sort of growth would you be expecting? Of course, we had the third quarter growth figures, a shrinkage, a contraction of 0.8% from the second quarter. Do you think we're going to see growth ticking up as well there?
Yes, I think, we were very much in a fat tail. We've thrown absolutely everything, including the baby, the bathwater at the stock exchange. And I think everything is in the price now. So on balance, I would say we are pointed higher. Values are very, very cheap. But, you need a catalyst to encourage people to come back. And I think that catalyst will be a combination of circumstances. We've moved up slowly. I think we can see that accelerate now. And, the PE ratios are very, very undemanding at the stock exchange. But I think what we'll see is a little bit of political closure, some faster GDP growth. The third quarter was very much the apogee of the drought. It was like coming through slaughter. The animals were all dying. That was all happened in the third quarter. We've had better rains now. It's looking a lot better on that front, on the hydrology front. So I think, there's reason to be optimistic, and these are very beaten up values. Well, just looking at the stock market specifically, are there any sectors perhaps or companies that have stood out from the rest and perhaps performed a little better and might give some hope going into 2010? That's a good question. Obviously, the first standout has been Kenya Airways, which bottomed out at about 17 or 18 shillings, is now at 35. I think there's still plenty of headroom. That's really been the outperformer at the bourse. Safaricom bottomed out at 255 last year. We're now around 460 levels. I foresee a sharp move above 5, coincidental with the first year results. Energy sector, there's been a lot of capital formation. The companies have raised a lot of capital, especially Kenyan. They've made lots of sort of very bold announcements about partnerships. That price is up about 25% from the lows. And the banking sector is trading at a P of between 9 and 11. And any pickup in growth will feed dynamically down to the bottom line for those stocks as well. So overall, I'm hard-pressed to find anything I'm very negative about. Of course, I forgot to mention the agricultural sector. Mumia sugar prices at 28-year highs. Tea prices not far off those levels. So if I look at it in total, I'm reasonably constructive about it. But I do think, you need a tipping point for some of these markets. And the question is, where does that tipping point come from? And do you think that the interest will be maintained in the fixed income markets as well? Yes, I think what we've seen, and it's pretty much a development across sub-Saharan Africa, is that there has been a lot of money on the sidelines. And, you know, as we've scaled up the bond issuance, I've been surprised at the amount of oversubscription. The latest government Kenya bond last year was twice oversubscribed. Obviously, the rate's very handsome, but it's signaling there's a lot of cash on the sidelines, and that cash just needs to be put to work. So I think the bond market will remain muscular, will maintain interest because of the rates. But at some point, investors will start looking at moving some of that money back into the bourse.
And is this interest in the bond market coming specifically from local investors or also foreign investors, Aly-Khan?
It's coming from both. I mean, if you look at the foreign investors are attracted to two things. One is that the currency has performed very well. It's been very low beta. Just overlay a comparison with the rand, and you'll see our range has been 10% maximum and reasonably stable. So I think, and plus then you're getting a very handsome carry trade. So what I'm finding is you've got a few of the more alpha style traders who are looking at the carry trade vis-a-vis the shilling and running that trade, and it's paying you a very handsome interest rate differential. So they're interested, and plus you've got the local investors who've, you know, who've moved away from the bourse. They've come into this, they prefer these returns, which are 12 to 15% annualized. They're practically guaranteed. So it's been a combination of both.